Hertz, right. It's been quite the story. You've been following them closely, I know. This latest quarterly report from them, well, it's raising some eyebrows, isn't it?
Yeah, definitely. Big time.
I mean, think back to their comeback, triumphant return from bankruptcy, right? Everyone was cheering.
Yeah.
But this isn't exactly a victory lap, is it?
Not quite. It's more like, hold on tight. We might be hitting some turbulence. You know?
Exactly. Turbulence. So where do we even begin? Let's talk about this EV thing.
Oh, the EV gamble.
Yeah. On paper, it all looks so smart, become the EV rental company, all those Teslas.
Right.
But then reality kind of hit.
It did. And it hit hard. What's so striking to me is the difference, the contrast, between how they were acting before. I mean, remember, buying back stock left and right.
Oh, yeah, like it was going out of style.
Exactly, like they were printing money. And now, this sudden downturn, $127 million drop in total revenue comparing this year to last, that's not just a little blip, it's a signal flare.
Yeah, it's a big one. And it all comes back to those EVs, right? The residual values, they just tanked, didn't they?
They did.
Yeah.
And they fell a lot faster and a lot further than many people were expecting. Hertz is actually, they had to take a $1 billion impairment charge this quarter.
$1 billion.
$1 billion. Because those EVs, the ones just sitting there on their books, they are worth way less than what they thought.
Oh, wow. $1 billion. That's like dropping your phone in the toilet, but on a corporate scale.
Pretty much.
So what are they even doing to try and stop the bleeding?
Well, they're selling off some of those EVs
Huh?
to try and mitigate, those losses. But to be honest, it's like they are trying to outrun a tsunami.
Oh, wow.
It's a huge problem. And the real question, the big one, is was this whole EV-heavy strategy, was it just a bad miscalculation?
Yeah.
Or just bad timing, Are those residual values going to bounce back? Or is this the new normal?
That is the OIS question, isn't it?
It is. It's the million-dollar question, or actually the multi-million-dollar question Hertz is facing right now.
It's a tough one. So let me get this straight. They're stuck with all these EVs that are losing value. And on top of that, they've got like a mountain of debt.
You got it.
I mean, didn't they just go through bankruptcy?
They did. And that's the ironic part. They came out of bankruptcy with a nice, clean balance sheet. But then, to fund this whole EV expansion, they took on more debt. Now they're trying to handle all these debt covenants related to ratios, liquidity. It's a mess.
It sounds like a mess.
It is. And we're actually seeing them issue $750 million in first lien senior secured notes, and then another $500 million in something called exchangeable senior second lien secured PI notes.
Wait, hold on. PI notes, that's where they pay the interest with more debt, right?
Exactly.
So they're basically paying off their credit card with another credit card.
You got it. And look, PI notes, they can be a helpful tool sometimes in some situations.
Sure.
But using them also catches that Hertz might be in a cash crunch.
Right. Makes sense.
They're basically delaying things, hoping things will get better before those notes come due.
Kicking the can down the road.
Exactly. And as if all that wasn't enough, there's these legal battles they're dealing with, too.
Oh, don't even get me started on those.
I know, right?
That whole bankruptcy litigation, it's like a ghost that just keeps coming back to haunt them.
It does. And that $288 million increase to their litigation reserve, that's a story in itself.
It's a big number.
Yeah. It kind of suggests they are getting ready for a really big payout because of this lawsuit.
Wow.
And no matter what the outcome is, these legal fights, they just drain resources and management's attention.
Oh, yeah, for sure.
It's a distraction they really don't need right now.
So talk about adding insult to injury, right? But they're making some interesting moves with personnel, too, amidst all of this chaos.
Right.
A new CMO with $1 million signing bonus. It's a bold move, isn't it?
It really is. And don't forget the general counsel. Got a promotion, nice big salary bump, and of course those stock awards, lots of them.
Yeah, I saw that.
So on one hand, you could say, yeah, sure, getting top talent is super important when you're trying to turn things around.
Right.
But on the other hand, it makes you wonder, are they sending the right message, to investors, employees?
It's giving me mixed signals. Are they focused on getting better in the long run? Or are they just rewarding the executives while the company's hurting?
That's the million-dollar question.
Yeah.
That's what analysts are trying to figure out. These decisions about the executives just add another layer of complexity to Hertz's already very complicated situation.
Yeah, it's a tangled web, isn't it?
It really is.
It's like they're playing chess and juggling chainsaws at the same time.
I know, right?
But even with all this going on, there's something I find really interesting.
Oh, yeah. What's that?
This report, it's got a ton of detail, like a crazy amount.
You're right, it does.
It's not just the usual numbers. We can actually see how all the different parts of their business are doing.
Right.
Like, how are the Americas rentals doing versus the international rentals, things like that.
Yeah, you're right. The level of transparency here is pretty impressive.
It is.
They've even had to change, the depreciation rates on some of their cars.
Because of those residual values.
Exactly. Especially the EVs. It's a real-world example of how things happening in the market can really impact a company's balance sheet.
It is. And they're not trying to hide the fact that there could be more impairments down the line. They're basically saying, hey, this whole EV thing, it might keep causing problems.
Yeah, they're not sugarcoating it, are they?
Not at all, which makes their fleet rotation strategy even more interesting, don't you think?
How so?
Well, they're getting rid of cars faster than before, but that's got to come with some costs too, right?
Oh, absolutely. Right. Every time they sell a car, there are expenses.
Right.
So they're trying to get ahead of things before those values drop even more. But it's a delicate balance.
For sure. And then there's the whole debt covenant situation. They're basically dancing around those rules from their lenders.
It's like they're playing a high-stakes game of Jenga.
Exactly. One wrong move and it all comes crashing down. They even had to change one of their agreements recently, the first lien ratio, to give themselves some breathing room.
Oh, you know about the first lien ratio.
Well, yeah. It basically means they got to keep a certain ratio of debt to earnings.
Right. That's exactly right.
So changing it makes sense.
It was necessary.
But it also shows how vulnerable they are.
Oh, yeah. They're walking a financial tightrope, that's for sure.
They really are. And then there's that bankruptcy litigation. It's like this dark cloud hanging over everything.
I know. That $288 million they added to the litigation reserve, that's a big red flag.
It's a huge red flag.
It tells me they're probably expecting to have to pay out a lot of money, which is just going to put more stress on their resources.
Okay, so let's recap. They've got revenues that are dropping, an EV bet that totally backfired, a mountain of debt, tight restrictions from lenders, and a potential legal bomb about to explode.
That about sums it up.
But they're still spending big bucks on those executive salaries. Doesn't that seem a little, I don't know, counterintuitive?
It does seem that way, doesn't it?
Yeah.
But think about it this way. You could make the argument that attracting those really talented people, it's essential when you're in a situation like this.
I guess I can see that.
Like that new CMO. They might be the key to changing how people see Hertz and getting them back on top.
So it's a gamble, but a calculated one. They're betting those executives will make them more money than they're spending.
Exactly. It's high risk, high reward. And it's just one of many risks Hertz is taking right now as they're trying to navigate out of this, well, financial storm.
It's a wild ride, that's for sure.
It is.
And it kind of reminds you, even the big players, the established names, they're not immune to these ups and downs.
Nope. No one is. And what's really fascinating to me, that this whole Hertz story, is how it ties into, like, the bigger economic picture.
Oh, yeah.
Yeah. There are troubles, especially with the whole residual value thing with the EVs. It could be a sign, a canary in the coal mine for other industries that are trying to figure out this whole sustainability thing.
Interesting. So we're not just talking about rental cars here. We're talking about, like, the whole shift to new technology and how it messes with the markets.
Exactly. Imagine, right? Those EV values, they don't recover.
Oh, that would be rough.
It would send shockwaves through the entire car world.
Oh, yeah, I can see that.
Manufacturers, dealerships, even the people buying the cars, everyone would feel it. And it makes you think, right, how fast is too fast? Is the market really ready for this big change?
It's a good question. So for someone like me, just trying to understand what's going on with the economy, what's the takeaway here?
Hertz's story. It's a perfect example of how hard it is to do business in a world that's constantly changing. And it shows how important it is to make smart choices, to be careful with your money, and to always expect the unexpected.
No kidding.
Seriously.
So basically, we got to stay informed, not just about individual companies, but about how everything's connected, right?
Absolutely. The more you understand the system, the better decisions you can make, whether you're an investor or a customer or just someone who cares about what's going on.
Makes sense. So as we wrap up this deep dive into Hertz and their roller coaster ride, what's the one thing you want to leave our listeners with?
Hertz's story. It's a powerful reminder that change is inevitable in business. The companies that survive and do well, they embrace the new stuff. They adapt, and they know how to manage risk. And that's not just for rental cars, that's for any business out there.
Well said. And to our listeners, I'd say this. Keep learning, keep asking questions, and never underestimate the power of a good deep dive. Until next time.